networking opportunities. I hope you found new friends and talk to your old friends. Now we have an exciting panel about the VC community and what we're seeing at the Web3 new trends forming potentially the 2025 headlines. So welcome on board. Please introduce yourself and share your thesis. And then how do you craft a message around your thesis to your investors this year?
Sure. Well, it's great to be here. Thanks for having me. Enjoyed all the sessions so far. So I'm Jalak Jobanputra, founder of Future Perfect Ventures. It's a fund that I launched in 2014 at the intersection, and I call it decentralized data, so the intersection of IoT, blockchain, and AI. I've been a VC since 99, and after going to my first Bitcoin conference in 2013, got really excited about the underlying technology and how it could be just as transformational as the internet and cloud was.
Fantastic. And Jalak is local to Miami. We're very proud to have you here.
Hey, my name is Perkins. I'm the president of CoinFund. We're in our 10th year, if you can imagine it. That's a lot of years in crypto years. We have a number of different strategies. We have venture strategies, both pre-seed and seed and Series A and B, and we have liquid strategies. Our thesis is that this technology, and by the way, our mission is to champion the leaders of the new internet. And what's the new internet? It's the internet predicated on blockchain technology. What does this allow you to do? It allows you to put private property into the internet for the first time. And that's a very, very, very big unlock. It allows you to permissionlessly exchange that value across different counterparties. We invest across various different verticals, including gaming, DeFi, CeFi, the intersection of AI and crypto that you're going to hear a lot more about, tokenization, etc. So that's us.
Thank you, Chris.
Hey, I'm Joe McCann, founder, CEO, and CIO of Asymmetric. We are a digital assets investment firm with a couple of hedge funds and 2 early-stage venture funds. Myself, I've been a trader and a technologist for over 24 years now. And so I run Asymmetric kind of like a technology company. And so our view really is kind of consistent with Chris. We think that this is just a massively disruptive way of bringing ownership rights, privacy, as well as expanding financial services to the entire world through permissionless networks. We tend to focus on areas that feed our kind of technical acumen. So half the company are exited founders, half the company are software developers. So we get really deep into the weeds on the technical side. So we do invest higher up the stack as well. So you can think like mobile is a huge focus of ours. We think mobile is going to be the biggest unlock for the next wave of crypto adoption. So we have invested in phones as well as applications on mobile, but also as low as, protocols like Jito on Solana, which enables faster and bundled transactions on the Solana network.
Fantastic. Well, as we have the election concluded and we have a pro-crypto president and a pro-crypto Congress, with a bull run, I guess, yet to start, and I'd like to hear your perspective. We've entered the crypto spring about a year ago, especially with Bitcoin ETFs approvals. So is it easier for you to talk to institutional investors when you are fundraising? Is it becoming easier? And how do you feel about entering the new year?
Yeah, well, I mean, it's much easier than it was in 2013 and 2014. I mean, then it was really, ETH hadn't ICO'd yet, and Bitcoin was still considered very much fringe. And over the years, and I'd say especially with the ETF approval, it's obviously not fringe anymore. There's a role for Bitcoin itself as an asset. But I also think there's more understanding as you see institutional firms like BlackRock start to tokenize different assets. And I know Carlos Domingo spoke about Harbor. We were an early investor in Harbor, which was one of the first companies to look at real estate tokenization. And I just feel like the infrastructure, the market, the institutional acceptance wasn't there yet. and also some of the underlying technology. All of those pieces are in place now. Much easier to describe and discuss that evolution to investors in our fund, and expect that to continue with this very supportive administration. I think we're going to get rid of a lot of the barriers or the uncertainty that existed with the previous administration.
Yes, I agree with you, Chris.
Yeah, I spent 15 years in the institutional space, and a couple of things are very apparent to me. Investors, institutional, even market participants, they want to take market risk, and they're happy to take market risk. Asset goes up, asset goes down. That's what they get paid to do. They don't get paid to take regulatory risk or operational risk. We've had issues in both of those spaces over the last few years. With this administration, you're going to see an incredible acceleration of mitigating that regulatory risk. And that's going to attract a ton of new investors and institutions to the asset class because you're taking that off the table. Now, I think folks like us, we've been investing on the infrastructure side for the last 10 years, and you're going to also see that operational risk starting to mitigate. So, this is an incredibly strong setup. I know you get into macro, but together, we're very, very excited about the space.
Yeah, so I could kind of maybe share my perspective on what it's been like trying to raise from institutions. It is next to impossible. Asymmetric's been around since 2022, not nearly as tenured as the other folks on the panel. We spoke with a number of institutions early on, and it was very clear to us that given the tightening policy by the Fed in 2022 and the collapse in the value of risk assets coupled with the FTX implosion, institutions were not interested at all in writing checks into emerging managers. Fortunately, we've had pretty decent success since launching the hedge fund and the venture funds themselves, but we are still actively fishing where the fish are. And so from an LP standpoint, where we're looking to actually raise capital is not currently on the institutional side until, to Chris's point, we start to see, I think, the reacceleration of interest by institutions. So for primarily our LP base is high net worth, family offices, and fund of funds. But when we go outside the United States, we recently closed a large new LP that's the first regulated crypto fund of funds out of Hong Kong. This suggests to us that capital pools around the world on the institutional side are available when there's clear regulatory frameworks in place. And Hong Kong has more or less done a 180 on their regulations over the past, call it 18 months, thus enabling exchanges to get licenses, as well as the SFC, which is effectively the SEC for Hong Kong, to regulate a crypto fund of funds. So I think that, given the new administration, when Trump and his team come into power at the end of January next year, you'll start to see a lot more of this interest because the problem has been very clear. There is no regulatory clarity, and that is not a risk that institutions are simply willing to take.
Joe, you made a really good point, and I think it's something called reputational risk as well.
Exactly.
So in the past, I was at Citigroup. I was trying to get crypto products approved. I had to take it to the reputational risk committee. We actually had those things. And so in the past, you were taking reputational risk for coming into the crypto industry. Going forward, I think you could be taking reputational risk for not being in the crypto industry, right?
Yeah.
Best performing asset class. Why did we miss it? So I think that's a material shift that we're about to
Yeah, we actually, that's actually a great point. It's reminding me that we have an RIA as an investor, and they asked us to get onto Goldman Sachs' private wealth management platform. And Goldman approved us, but only for that RIA. And I said, well, what can we do to kind of open ourselves up to the broader, Goldman, private wealth management platform? And their response was, it was a bit shielded with what they were saying. They were effectively waiting for the election because they weren't willing to take the career and ultimately reputational risk because they have zero crypto funds on their platform today. That is absolutely going to change going forward. So from our perspective, instead of trying to go down the route of, say, funding from like pension funds or large asset managers or foundations, we'd rather go to the banks who clearly want the ability to offer crypto fund related products to their clients.
So interesting. And speaking of reputation risk, I think we all observed the election cycle where it's a reputation risk to not talk about crypto, to communicate about it. Otherwise, you would be perceived as a non-understood by the Gen Z, by the new generation. Chris, given your experience and your role with CFTC, which use cases you're excited the most, and what can we expect from the regulation thanks to your role, which is amazing that you're doing it for our community, and CFTC has to be very lucky to have you as an expert voice.
Thank you. So I'm on the CFTC Global Markets Advisory Committee, and we've been tasked to provide recommendations to the CFTC. I think those goalposts have shifted a little bit now with the new administration. But a couple of things that you're going to see coming out of the committees is the first is we're in one committee and BlackRock said, you know what, we should recognize ETFs as eligible collateral because remember, like the derivatives industry is a $600 trillion industry is supported by collateral, and there's certain types of assets that you can have. And BlackRock said, well, we should allow ETFs if those underlying assets are eligible. We should recognize them. And we piped up and said, well, what about the wrapper shouldn't matter either? What about tokens? And they said, wow, that's a good idea. And when you step back and you start thinking of the utility of using tokens for collateral, right, you're reducing systemic risk because you don't have to wait 2 or 3 days for it to settle. You collateralize yourself instantly, right? So on the 21st, we're going to put forth a proposal to say, CFTC, you should recognize tokens as an appropriate wrapper for that eligible collateral. What else are we doing? Right now, our country is weird because some assets go into the SEC, others go into the CFTC. And to date, the administration has kept it very nebulous, and it's a way to slow things down. And so we're putting forth, also on the 21st, I'll be presenting a proposal to say, CFTC, define the characteristics of what would go in the commodities bucket and publish it on a webpage, and that way we have clarity. And so I think one of the trends you're going to see is clarity. Again, reducing that regulatory risk, and then we're able to unlock innovation. Because if you know the rules and you're a builder, builders want to build. They don't want to care about what the regulations. Tell me what it is and I'll build. That's all going to happen sooner than you think.
Yeah, I just want to underscore a point that you just made about the collateral piece. So on the hedge fund side, we trade a lot of derivatives, but we trade them with over-the-counter OTC broker-dealers. We don't trade with the Chicago Mercantile Exchange. And why? Because we can't post, if we want to short a Bitcoin future, we can't post Bitcoin against it. We have to post cash. And so that becomes untenable from a risk management standpoint. So today, the broker-dealers like Galaxy Digital and FalconX and DRW, these kind of tried and true firms that will make markets on options and derivatives will accept these things as collateral. So this is I'm really hoping this gets approved because this would be a massive, massive unlock for more institutional flow into crypto-related products if the CFTC approves allowing tokens as collateral.
It's an amazing time today, seeing with the election what's going on and with your work, Chris, and the next year will be outstanding for builders and for early adopters. Jalak, I've known you for now several years here in Miami. I have a privilege to be your friend. Thank you. And I know you always you've been passionate about real use cases in blockchain. You were kind of an outlier in the venture world in the Web3. So I want to ask you, what kind of use cases are you passionate about? I know you've backed some of the transformative companies in this space. Which use cases are you most passionate these days?
Well, one of the underlying thesis of the fund and why I started it was that I believe that this technology will be just as or more transformative than the internet was. And having invested in the early internet and seeing its growth, the reason I believe that, and I also that every sector was going to be transformed. And obviously we start with financial services, but if you think about healthcare, right? Look at our data and healthcare. It's very fragmented. There are a few electronic medical record companies that don't talk to each other. There's no interoperability. I mean that's seemingly low-hanging fruit, but then you look at the institution, those companies have so much power. But that's going to change. I believe people are going to realize what's possible with the technology and are going to demand more interoperability. Real estate, I mean, you see that front and foremost, and that's why we invested in Harvard early days, because I do believe the real estate industry is one, why are we still, from the front end of the ownership of titles, but even data about a particular property, that can all go on the blockchain. It can all be transferred. So, and I do a lot of pure play. I do some pure play AI, and I just got a deal that with bots that are meant to replace parts of what the real estate agent does, and so I think we're going to see this combination of blockchain and on-chain activity, tokens, plus some of the AI technology that's getting out there that's more user friendly. We're going to see transformation in every sector.
I agree with you. Definitely decentralization and AI give us so many opportunities to look at the traditional industry in a different way. For example, I envision a model to be built for realtors. To your point, there is a startup that is creating more automation utilizing AI. But imagine if this model is owned by the industry itself. So then you have the stake and you have the incentive to actually train this agent, so that one day, if the AI will be integrated in this industry as much, it won't be owned by OpenAI, but the model will be trained by, for example, realtors, and then realtors will have a stake, will have dividends, and so on. That's where the blockchain power comes into place, because you can truly decentralize it, and you're not dependent on founder or stakeholders' decisions how to distribute dividends and profits. So I'm very excited about this convergence between AI and blockchain. Anything to add?
I'm just glad that you mentioned the kind of permissionless AI models. We invested in a company that provides exactly this. So it's a company called DRIA, where today, if you use, there's a website called Hugging Face, which is where you can effectively download pre-trained AI models, share your AI models. But the problem with that is it's a Web2 approach. It's still a centralized service that's at risk of being shut down or shutting you off. DRIA spins that on its head, where the entire kind of almost like marketplace is decentralized and permissionless. And so the types of models that will be available and trained on there, whether it's real estate related or otherwise, can pretty much never be taken away. And so this is one of the reasons we have one AI deal, and it's this one, because we do believe that if you saw what happened with the blowback for Google's Gemini when it launched, whatever, earlier this year, late last year, it was clear to us that any sort of influential bias by the people training these models can have a net positive or net negative effect on the outcome of those models. Our view is that they should be permissionless and censorship resistant, which is why we invested in a company like DRIA.
Yeah, I'll say a little thing about AI. So if you think about the AI stack, you have data, right? And these AI models need a lot of data. The thing about Web3 is that you now have sovereignty and control over your data. And this is going to be something that AI is going to be seeking. They're going to want as much data as possible. They're hungry for data. But now we're able to leverage that provenance in Web3. So that stack is going to be very important. Then you have compute. And you're going to see a lot of things going on in compute. You're going to need massive amount of computing power. Are you a closed, centralized entity that invests in a lot of compute, or is it easier to decentralize it? And we're seeing a lot of innovation on decentralized compute, and even marketplaces where you start selling compute. And then the last thing is inference. What are the model outputs? And do you want them closed like the Web2 way, or should they be transparent and open? And so, this is a very interesting interesting vertical for us. I think you're going to see a lot there. It's going to impact every single industry. And I think the Web3 approach has a lot of value as opposed to that opaque, non-transparent Web2 approach.
Yeah, I mean, we've been hearing a lot about large language models, right? And we look for small language models, which means very vertical, specific solutions that, where the data can be verified and you may not need as much data. And local language models, which is why, with crypto being decentralized, blockchain being decentralized, and global, we're able to get data from on the ground. So vertical domain-specific data, but also geographically. And I think that's going to be transformational to creating better AI models.
Absolutely. Final points from you. Any predictions for 2025?
The prices are going to be a lot higher.
You're going to see a lot more ETFs.
Yeah, I think we're going to see a 10x plus increase and just what we're in terms of the companies getting started, in terms of the potential, in terms of the valuations in the sector.
Do you think we'll see again crazy valuation as AI companies are experiencing now in blockchain in 2025 again?
It depends. It depends on the project and the founder. You're also going to see a lot of new founders and new entrepreneurs. Why? Because they want to build. And in the past, you're like, I'm going to leave my career, I'm going to take all this risk, but I don't want to go to jail or take personal liability because I don't know the regs. Once you take that off the table, you're going to see so many new builders coming in, and innovation's going to follow. It's going to be awesome.
Yeah, and one point I'll make on that note, too, is that if you heard about recently this company called Bridge that was acquired by Stripe for $1.1 billion. Bridge is a company that creates stablecoin infrastructure. Stripe is the darling of Silicon Valley. They are the quintessence of what tier one Silicon Valley VCs want to come out of Silicon Valley. And they were originally in crypto, and then all of a sudden they were not in crypto. And that has changed over the course of the past 18 months. And with this acquisition of Bridge, at an incredibly high multiple that I'm not at liberty to share, they are every other corp dev department around the country is looking at their stablecoin strategy. Visa and MasterCard's corp dev teams are looking at stablecoin strategies. And so to the point about all the new builders coming, there's going to be now even more agency for your traditional VCs to say, hey, it's okay to play in the Web3 area because there's actual exits. Bridge being a unicorn exit in 2024, given the regulatory unclarity, is a huge signal coming from a company like Stripe. And I think you'll see a lot more of that coming the next year or two.
Amazing. Thank you.